Good morning, good morning. Gonna give it a few minutes for some people to join us. We have a ton on store today, guys. It's gonna be a big, massive day. Hope you guys are ready for it. Hope you're prepared. PPI news out in 1 minute. Less than a minute. I traded this bar on the NQ. 110 bucks. Just a quick in and out. And this is why I tell you guys not to trade 2 minutes before or 2 minutes after. I'm waiting on Benzinga to come up, but look at that massive bar. I don't know what the news was, but this is definitely scalpable. Oh, I got it at 50. I don't want that. We're just going to scalp one. One contract if we get filled here. Come on, come down to us. There we go. Order filled. I'm going to close it out for a $29.50 profit. Again, what you're looking for, guys, is an overextension of each individual candle if you're going to scalp, which is why I put my order where I put it. Hey Russo, good morning. Can you hear me?
Yes, I can hear you.
Okay, awesome. Yeah, it started just a few seconds ago. I don't know if anybody's on live on YouTube, so I figured out what it was yesterday. After you start the broadcast, you actually have to go back in and hit start after all that. So we are recording today. Same problem as yesterday. I don't know why it opens up on the NQ, but I did all the prep there and realized when I took my trade I was on the NQ. But I scalped this bar. You see my entry and exit right here?
Yes.
I put the things on there, but it started to... Let me open it up big so you could see. All right, maybe I don't have this lock screen off. Yeah.
I have to go out and come back in. My screen froze.
Okay.
Oh, no, I'm good.
No. All right, well, I scalped that bar. I'm trying to get Benzinga up here. I don't know what's going on here, but why the... I don't know what the news was now. I mean, I really don't care if it was good or bad, but I'd like to know. And let's why is
EOWW Ammo Inc.
There it is. I don't know why my economic calendar went off. So it looks like it was bad.
I'm not at my main setup. I'll be able to take a look.
Yeah, it looks like it came out worse than expected. Negative 0.2. Like I said, man, we got this wedge. Yeah, we clearly broke that wedge even on the higher time frame. So let me just go ahead and draw this now, what I was looking at this morning. We had this beautiful wedge pattern that developed over the last several days. And now you can clearly see we broke out of that. And that's what I was saying this morning on the pre-market. And then I took one trade right here. So let me get my trades on here. All right, so you can see where I took this trade now. I waited for the bar to overextend itself because it had already went up several times. But by the time I was ready to take the trade, it was like up in this area. So I put my order here, and you could watch it in the recap. And it came down, filled me, and then I actually closed it out here because I wasn't sure what exactly the news was. So I was just looking to scalp it real quick, but my take profit was literally like $2 above that. So I think, not what I think, but notice, let me just show you here so we can kind of recap what we did yesterday. Okay, so yesterday, guys, we had a mishap. It's bound to happen. But this morning here, we had a nice range, right, from the overnight hours. And just like we were talking about yesterday, when you're trying to trade ranges, you are looking for a breakout to be in the top 50%, right? So what you're looking for is the price to come down, go up to the range, come down to the range, up to the range, and then finally stop coming all the way down. And now it's trading within the top 50% of that range. So that's what you're looking for when you're trading ranges. And yesterday I was explaining it like fireworks. This is a ground. If you light a bottle rocket, it's going to go shoot high up in the air and then it's going to fizzle out and come down. But when you're shooting it, when the ground level now is up here, that bottle rocket has plenty of room to run up before it fizzles down. So when you're looking for breakouts, if the price started here and not here, it's never going to work here. All right, so just keep that in the back of your mind, and we'll cover it more and more as it goes. So with that said, you might ask, well, then why didn't this candle work? Well, because it was 8:30 and we had PPI coming out month over month. All right, so it was building up, and had that news been good, oh man, we would have seen some jet fuel right there. All right, so we broke the trend. Let me open that up a little bit. Now here's a perfect example of what I tell you guys about the RSI. How it'll just bend, right? It'll bend, so just because it's down doesn't mean you buy, right? So we still have, that was enough to make a really big move right now. But we still have the FOMC minutes coming up, all right? So trading today is kind of just going to be like kind of blah. I really wouldn't be involved in trading today until after that news. I got a feeling there's going to be a lot of fake outs. Nobody really knows what's going to go on. I say it every time we have this news, just it's better not to trade. Save your money, wait for the news. Because otherwise you're just going to be giving your money to them. All right? When there's news like this pending, unless you see an absolute great setup, which I don't expect you guys to know any setups right now, which is why I would encourage you not to trade at all when we're in times like this. Notice if we go out to the 30 minutes, right? Let's bring this down. Look at our overall trading, okay? Don't mind all this. I'm doing a 30-day boot camp, so I'm using the charts for education purposes, so don't mind all my lines here. But what do you guys clearly see? All right? For the last, how many days do we got down here, right? From the 14th all the way to here, we have been in one big range, right? We're just range bound right now, and this is why I'm telling you, when we're trading lately, we're not looking to go big, right? And there's really no big movement happening in the market right now. All right, the market is kind of trying to figure out where it wants to go in life, if that makes sense to you guys, right? I always told you the market has an objective. It's not just aimlessly running through the wilderness. It has places to go, people to see, or prices to see. But right now, it's kind of undecided. It doesn't know what it wants to do, right? There's a lot of stuff going on in the world. You got Russia threatening nukes. You got Ukraine. You got inflation through the roof. Everybody's lying about everything. So, nobody can't really knows what to do right now. It's kind of just stuck. So that's what I'm saying. Look at all these breakouts, right? They're not making big moves like they should. They'll break and then price will pull back. They'll break. Price will pull back. They'll break. You know what I mean? If you guys can see that, But again, just what I've been telling you since yesterday, right? If you have your ranges, if you have your range here, okay, notice this price was in the top 50% of the range. And then it broke, but it didn't really, you had no follow through. Okay, same thing on this range. All right, price was up in the top 50%. Big green candle. You know, you could have took this one too, but for a small profit, small position size. Could have took this one too. Now, like I was telling you guys yesterday, and I really don't want to jump all over the place with this, but I want to keep repeating myself. When you see a big bar like that, right, you automatically have to assume, not assume, you have to know, this is really your roof, right, of the big range. Okay? So even though you have a great big bar at the 50% level, I always tell you, you have to look left, right? You have to look left. You have to look left. All right, guys? You want to look left, but this would have been another good bar. You know, I would have jumped in probably midway on this, all right? Because it's a really nice bar. And remember what I told you about positive and negative energy, right? And we were in the top 50%. We were in the top 50%. Launch off was in the top 50%. Launch off in the top 50%. So you know you can scalp these big bars, right? You can scalp those big bars. This one is a no-go. Why? Because it started on the ground floor. This one started at the top 50%. Am I going too fast, Russo?
I think you could slow down a little bit would be good, yeah.
Okay. I actually had an energy drink today, so I'm like wired.
I think so.
I haven't had an energy drink probably in 10 years. And I drank one today. It was called Bang. And I'm literally like boing, 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 boing.
Oh, your namesake. Bang.
I think it's finally kicking in. All right, so let me slow down again, and I really want to discuss these ranges, guys, because the market always will range. It doesn't matter what you guys see these every single day, right? You see it every day, and this is how the market moves. It ranges, and then it'll make a big move, and then it ranges, and then it'll make a big move, and then it ranges. Okay, that's the way the market works. It always ranges, and then it'll make a big move. And then it'll range, right? We ranged, big move. But that was because of news, right? Now we're ranging again. All right, and that's what I would expect to see, this sideways garbage for the rest of the morning until 2 o'clock. Remember last month on the FOMC, I said the same exact thing. All right, this is what you can expect when we have major news like today. And today is one of those days where the market's gonna move. All right, so we already have one piece of the information. Okay, that's a powerful, big negative steroid head in the room, right? That guy wants to take everybody with him right now. He's trying to discourage everybody in the market, right? So we already have one piece of the information. But like I said, let's go back, zoom out here. Let's go to the 30-minute time frame. All right, just like yesterday, right? What I keep trying to drill into your guys' head is that even if the market is going to continue its down move, market makers are not going to want to sell. They're not going to want to keep selling lower and lower and lower, because they're not gonna make any money that way, right? So you have to expect them to rip it back up, right? You have to expect them to rip it back up. You have to expect them to rip it back up, because they're not going to just keep losing money selling while the market tanks. Okay? Remember, the name of this game is to think like big money. Think like market makers think. If you had $1 billion, right? Would you just keep selling it on every down move? Right? Would you keep selling and it just keep going and you keep unloading? No. Why? Why would you do that? Right? You keep selling for lower and lower and lower and lower prices. That's not how this game is played. Okay? So they'll bring it up and they'll start selling into everybody's buying positions, right? Then they'll drop it. Then they'll start bringing it up, get all those bulls coming back in. And as all these orders are coming in to buy, they're secretly, silently selling them behind the scenes where you and I can't see. And then all these people are trapped, and then the price just tanks. Then they start the process all over again. All right, guys, so don't get caught on the wrong side of the market. You have to think like smart money. You have to think like market makers, okay? That's your ultimate goal in this game if you want to survive. Is you have to understand the market. You have to understand the fundamentals of how money is transferred in the markets, right? So do you guys have any questions? And good morning, Bocce and Russo. Sorry I didn't say good morning. Good morning to whoever's on YouTube, if anybody's there. But what I do see right now, you guys see this rounding bottom on the higher time frame?
Mm-hmm.
So keep that in the back of your mind too, because on the other hand, right, if, I don't know what's already priced in, but typically the FOMC minutes are going to be already priced in. The market already knows, right? So on the other hand of what I was just saying, like I said yesterday, in my opinion, if the market was going to sell off, it would have already done so. All right? So what we're seeing here could be nothing more than bringing the market down to load up on shares, right? It could be the exact opposite, right? They could be bringing the price down to buy so they're in at the very bottom, right? Because like I said yesterday, if you look at the candles, let's go to the daily chart on here. But remember yesterday I said, if in my opinion, if they were going to sell, I believe they would have already done so.
Bang Bang?
Yeah.
Bocce has a question, and for some reason when she unmutes, she can't talk. Like, you can't hear her.
Where do you see the questions? I don't see them anywhere.
On the right-hand side, there's a tab called General Questions to the right of the screen. You have to open the... Yeah, we can hear you now.
Let me see. Okay, yeah. Now, okay, does it make sense? Now I see it. Thank you, Russo. Am I still live? Nope. Okay, am I back? Hello, hello? Hello? Can you hear me, Russo? Bocce? It says my voice is connected. You know what? Okay, now can you hear me?
Oh, yeah, now.
Okay, yeah, I have Discord up on a different screen so I could actually see it. But let me make sure that didn't stop the live stream. Okay, good. We're here. Okay, you guys can hear me, right?
Yeah.
Okay, now my volume is way down. Okay, Bocce, so does it make sense to use Fibonacci to determine the 50% level? Fibonacci is a good tool if you know how to correctly use it. I personally don't use it. But yes, you can use it. But, personally, if I did use it, I would use it out on the higher time frames only. And let me go to the 120-hour time frame. I'm going to switch to the NQ so you don't see all that stuff on there. So give me 1 second here. And here it is all on here. All right, well, let me delete everything. And hopefully it didn't delete it on the other side. Okay, so anyway, if you're looking at your Fibonacci level, not an indicator. Oh, it's going to be over here. Drawing tools. Fibonacci retracement. You want to take it from your highest point and bring it down to your lowest point. Okay, and the most important levels on the Fibonacci are going to be your 38.2, your 50, and your 61.8.
Okay.
Jimmy on YouTube. Oh, cool. Hi, Jimmy. I'm glad you guys are using YouTube also. And I'll figure out how to get the YouTube chat up because it's in here on the OBS, but I'm not that smart yet, okay? It shows you the chat here, but I can't figure out how to keep the chat up because I put it on another screen, but as soon as I close it out, that goes away. So I have to figure out how to dock it to that screen. And I guess I'll have to do that today or tomorrow, or by the end of this week, figure that out so I can answer everybody's questions. So anyhow, yeah, your major levels on this are going to be your 38.2, your 50%, and your 61.8. That's what 99% of the people care about. And, you know, if you look at it here, it kind of broke this. It kind of broke the 38.2 retracement, right? It did kind of stop at it. All right, it did kind of stop at it, but it just flung through. But again, we're on a weekly time chart right here. Oh, no worries, Jimmy. Just glad you're here. And then your 50% retracement, that one kind of worked. Your 61.8. All right, so I don't know. I really don't like using it that much. I mean, I don't use it, so I'll just say that, not that much. But
Okay.
can it work for you? Yes, I mean, it can, but it's not that reliable. Remember, we're day trading. We're not swing trading or, you know, long-term investing as far as what you would use this for. And you could use this on a daily time frame, but again, the less information you're looking at, the better off you're going to be. And that's really what I want to teach you guys is how to read price action, you know, because once your chart starts getting filled up with, you know, this, that, the other thing, it's taking your attention off of what's happening in the now. You know what I'm saying? So I've looked into Fibonacci before, and I was just like, yeah, there's no point for a day trader to use a Fibonacci level, you know, outside of if you're buying an options contract for 2 weeks out or you're selling options contracts. I don't even use it selling on Apple. All right, I just don't use it. I mean, the market tells me everything I need to know. So, yeah, thank you for the question. I hope I answered it enough for you, but, you know, if...
Oh, yeah. I'm going to do whatever you're doing. And one more quick question. Do you use the same EMAs throughout all the time frames?
Yep, the 20, the 200, and the VWAP.
Okay.
So that's across the board, because if you look at, you know, the time frame here, let's just go to a 30-minute, and you're going to see that we're going to be under the 200 on the 30-minute, right? Like I said, you know, the overall trend is bearish. So the bears are in full control right now. And until your higher time frames turn around, you know, we got that golden cross. Oh, let me move this up top here and see when we crossed. I think it was back in December almost when the 200 and the 20 actually crossed. But like I was saying in some of the videos, you know, there's a lot of people out there that thought they were good traders because the market did nothing but go straight up for 10 years. You know, and this is when the market gets rid of those people. Right? This is when the market says, you know what? Haha, give me that money back. Because most people have never been accustomed to trading like this. And again, I love trading in these kind of conditions, because when you trade in these conditions, I mean, just like what I'm showing you right here, okay, this right here, you know, your level and your mid-level, man, when the market is moving nicely and, you know, not selling off like it is and not the volatility we have, man, these moves right here will make you thousands of dollars a day. Okay, I mean, they just go up, straight up. Like you've seen back, even back before when we were trading, you know, Tesla just ripped the entire day. Google just ripped the entire day, right? You remember those days? I mean, those are the days where, you know, in futures, my goodness, if I knew about that then, I literally could have made $50,000 to $100,000 every single day trading the NQ. Literally, no exaggeration. Probably even $200,000, $300,000 trading just the NQ back when the markets were really good like that. And we're going to get back there again, right? And by the time we do, hopefully you guys will be ready to roll on your own, you know? I mean, my goal is to get you up to speed as quickly as possible. But the thing right now is, again, you know, with such a tight range that we're in right now, there's really not room to grab those big movers because we're looking left, right? And it seems like every time we look left, there's construction going on, right? There's massive walls that we're going to run into traffic. So, like I was saying yesterday, these are the times where you want to minimize your risk, you know, trade very small, just like this trade right here. I traded, well, yeah, I guess I traded, no, let me go back.
Can you, Bang Bang, can you explain looking left again, please?
Yes, absolutely. Let me go back. Let me go to the 5-minute time frame. Okay, so just like this, let's just mark this out as the range, okay? We're going to mark, this is your range, all right? And remember, we're looking at a doji candle, right? It'll typically go up. It'll typically go outside of that range and outside of that range to the downside in equal amount of height. You see what I'm saying? This candle is like equal to this one, just like a measured move. Okay, this is your no trade zone. You wouldn't take any trades inside that range. All right, no trades in that range. Now, this is going to be your 50% mark. Okay, the fireworks from the ground floor of the range are never going to work breaking out of it, right? If this is the bottom of your range, this is the top. All right? So what I mean by looking left is, first of all, you know this move would not work, this move would not work, but at the same time, we're inside that triangle. So there's a lot going on. Now, looking left, in this range, Russo, let's just draw the range, the entire range. You have to look left to see where there's going to be major resistance. Okay, so, oh yeah, I really don't like that.
Are you recording?
Yes. All right, so this is a nice looking area. Okay, so we have this range right here, right? I'm going to draw the whole top to bottom range. Now, I tell you, you always want to be buying off the 50% level in the range. You want the range, when you know it's going to break out, to be making higher lows, right? Higher lows. This way you're not shooting off to break out of that range off of the ground floor. The problem with a breakout of the range right here, even though you're 50% of the way, is if you look left, you still have a big top here. So there's not much room, if this is going to break out, to really fly off the hinges to the upside, because you're going to have overhead resistance if you look left. All right, so, but that's what we're in lately. And that's the problem with trading in tight ranges. See, you look left here, there's a lot of overhead resistance where sellers are going to be waiting. Okay, so if you look at it, let me do it like this. If this was to break out, okay, if this was to break out, your next area of resistance would be right here. So you only have about this much room to make a breakout. You see what I'm saying? because of all the pressure you're going to have to the left of that breakout. You see what I'm saying now? So you'd want to keep your take profit very tight, and you'd want to keep your position size very short. But because of the market conditions we're in right now, we're not getting that big room, because typically you would see something like this. Okay? Let me get rid of all this stuff. Okay, so if you couldn't see anything to the left, typically when we would be in an area like this, and this is your range, typically you wouldn't have any resistance above you for at least 30 to 40 points, 50, 100 points. So you would have technically clear skies to the left for a breakout. You wouldn't have any resistance to like this area. So when it broke out on that first green candle, you could buy, and your take profit wouldn't have to be till up here. But because we're looking left and we see these candles right here, we know it doesn't have much room to break out, right? Because as soon as it breaks out, it's going to get met with resistance from sellers at this resistance level that's off to the left here. So that's why I say, just, you know, in the market conditions that we're currently in, it's best to trade small and quick. Be in and out. Take that in and out. Just immediately grab your profit and run. Because this is pretty much a scalper's market that we're in. All right? Does that make sense?
Like, yes. It looks like the price action is staying near that. Is it a light green line? Is that the VWAP? It looks like it hangs out around there, doesn't it? Or,
well, it's always going to hang out around the VWAP and, you know, the lines, because that, you got to think of price action as like a rubber band, and the lines are kind of like a pole that the rubber bands are on, and they just like to snap out and snap back, like if you were pulling that rubber band. You know what I mean? Let me get on the 2 minute and I'll show you what I mean. That's what I'm always talking about when I say space, right? When there's a lot of space between the 200, the 20, and price action, you know you're going to get a snapback to the opposite direction.
And the yellow is the VWAP.
Right, the yellow is the VWAP. So you see all of this.
Green is 20.
Go ahead.
And the red is the 200.
Correct. So there's a ton of space between the 200 and the 20, right? So you shouldn't be looking to go long here, especially in a range market, because of all this space. Now notice we broke. Here's another example of a range, and I'll keep covering this over and over and over and over again. All right. Here's another example of a range. This range, and again, we don't know what's to the left. All right. So we don't know what's to the left of this, but this, just looking like this, so we don't know what's to the left of it. These were big bars leading up to a breakout. And I always tell you guys that they're never going to work, right? So you would not be buying the next bar to close after that, this red bar. Because big bars leading up to an area of resistance are never going to work. Okay? Your better trade would have been, if you were going to trade this area, and as a new trader, I hope you wouldn't, but your better trade would have been waiting for the what? The retest, right? Like I always say, it's always going to retest. Sometimes it won't, but 89% of the time, you're always going to get the break in the retest. If that makes sense to you. Now, again, we are bouncing off the 20, but you always have to remember, bouncing off of that 20, you always want to look left, right? But you guys, I want you in the habit of knowing that, all right, this is automatically your range, right? We're making lower highs, lower lows, right? And then all of a sudden, boom, boom, boom. Okay? Big bars going up like that are never going to work. So your next best trade to take would have been the retest, right? This would have actually been a good area to take that bar. You know, based on the 20. Okay, we already came up and retested. We're coming back down for a second retest. This bar turn green on the way down at or near the 20. You could have even entered on this bar, right? And put your, well, this, I got to be careful what I say because I don't want to teach you guys a bad thing. But to enter on this bar would have been really good because you would have had a nice type stop loss on this bar. All right, so once you understand what you're looking for, and this is why I want to spend so much time with you guys in a practice account and explaining this stuff over and over, is so that you can immediately go into the market yourself and identify, hey, this is a good trade, right? So this would have been a good trade for several reasons. One, your RSI is holding strong, right? You're above the 50% line on the RSI, okay? Which means the overall market strength at the time is strong, right? It's holding. You're above the 200. You're above the 20 period moving average. You're pulling back to the 20. So to enter here would be an excellent entry point because your risk to reward is so small. Now, if you entered on this bar, remember, you don't want to lose more than one bar. That would then, to enter on that bar, you would then have to put your stop way down here to be underneath this bar. And that is a massive, risk. Whereas if you entered on this bar, if you entered on this big green bar, your stop loss would have been right here on this little gravestone doji green candle. But if you entered on the next bar, this bar, you would have to put your stop all the way down here. And that's a big risk for a small reward. You see what I'm saying? If that makes sense. And again, don't worry if you don't. You're going to see it. We're going to talk about it every single day. All right? Because these are going to be the most profitable trades you're going to take. And I want you guys to learn this setup and this pattern more than anything.
Bang Bang?
Yeah.
This is the second day I'm looking at this in this way, but it looks like what happens at around 3 a.m. happens on a bigger time frame in the morning, around 8 and then later. Is that typical?
Well, today it was because we had the news at 8 o'clock. And yes, almost all the news when it comes out, it's going to come out either at 8 o'clock, 9:30, and sometimes 10, but then 2 o'clock also. But yes, from 3 a.m., like here was 3 a.m. this morning, this is about where we started. And again, it's the same exact setup. You would go from 2:30 to the 3 a.m. mark, right? And then you're looking for that candle to break. So you stay on the right side of the market, right? Today was a little bit different. We did have a nice big run up all morning. But if you remember what I was showing you guys last night, if you looked at that from last night, I showed you guys the divergence. If you look at what I posted, we had the double bottoms, right? And the TTM squeeze did this number, and so did the RSIs. So we had massive divergence in the market. So if you looked at that last night, you would see what I was talking about, and that's why we got this move this morning the way that we did. Let's see if we could see it on the 1 hour time frame here. I even said that yesterday in our live. Remember, Russo? I was showing you this yesterday.
Yeah.
We have the divergence here, and if you look, I posted it last night. If you look on Discord, I put it there too, talking about a huge day today with divergence and news. So yeah,
I saw that. Yeah.
Yep. So that's why this morning, all morning it ripped up, right? Today would have been a great day to go long from even overnight. And that's exactly what we got. But now, now we're pulling back. And if we look at it on this higher time frame, what do we see? Let me get the line. Can you guys tell me? We spoke about this yesterday. What just happened here? And on this time frame, the candle hasn't closed yet, but if you look at this and the uptrend, typically when this breaks, this divergence, uptrend is over and we're back to the downside, and it broke. But this is an hour time frame, so this isn't done wiggling around yet, so don't go by that. But yeah, typically when this line will break, that uptrend is over, short-lived. Let's see what the 15-minute looks like. Yeah, again, so as of now, you know, that uptrend is now clearly broken. You guys see that on the RSI?
Yep.
Ay, 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 ay. All right,
So for
that
the
Go.
future, you don't use TTM squeeze or the MACD?
I don't use the MACD, no, and the TTM squeeze, they don't have one on here. Now you can always leave, you know, Thinkorswim open and put the NQ on there if you know, to look at. I have them all open on my charts, you know, just for extra confirmation and for doing the pre-market game plan and stuff like that. I'm always looking at Thinkorswim, but no, they don't have anything like that here that I know of, and I didn't look. Let me look. They could possibly very well have it. No. Well, maybe in community indicators. I personally wouldn't use a community indicator because I'm like a virus freak. I wouldn't trust them. You never know. You know what I'm saying? I'm just paranoid like that. You know, there could be some out there that could spoof your account and you wake up tomorrow and you're bankrupt. So I'm not one for using community things. And I'm sure they have things or protection in place, but you know, it happens all the time and you see it. I've never heard about it in the stock market, but I just wouldn't do it myself. All right, so do you guys have anything else you want to discuss this morning? All right, so here's a really good divergence, right? We made a much lower low, but a much higher low on the RSI. Good scalping. But yeah, I mean, if you want, we could scalp a little bit. If you guys want to scalp, or if you wanted any questions answered, let me know.
So all your indicators are exponential, they're not simple?
No, the 20 to 200 are simple moving averages. Let me see. No. Simple moving average, VWAP, relative strength. And this one, I want to do a little more research on this one and just see why it works the way that it does. I was thinking that it was kind of like the projection oscillator, but it's not. So I'm going to research this a little more and probably change the video on it and see if we can find something a little better. But the RSI really is a really good indicator for this, and you know, I'm going to teach you how to use it properly. But as far
they had the ADX indicator in there. Would that be? I wonder if that would be comparable to the that tracking.
the ADX, the crossovers, I don't really like. Is this a crossover one? Let me just see. Yeah, I don't like these at all. You know,
Okay.
this actually looks funny. It looks like a dragon with his tongue out. Now I want Chinese food.
What?
It makes me hungry. Yeah, you know, because again, these kind of indicators are, you know, they're all lagging. You know what I'm saying? So,
Okay.
all right, so this is. All right, this is what I mean by when I tell you like this. A lot of these indicators, you know, they're useless garbage. But by the time the price moves and does what it already did, like right here where this crossed over to tell you to sell, right? I guarantee you that was right in this area where these bars were, right? So if you went to sell, you know, you would have got stopped out. You know what I'm saying? Because
Right.
and what time frame are we on? Let me even get down. Yeah, we're on the 2-minute time frame. But notice as these bars move, you know, these lines just wiggle just like the RSI does. You know, so to be focusing on this when you're trying to trade, it's going to take your attention off of what's happening right in front of you. You know what? Does that make sense?
Yeah, it's overkill. You're right.
So and again, once you learn what it is I'm
So
teaching,
you're saying read off the chart more than the indicators. Use the indicators as a backup to what's happening on the chart.
right? I use indicators as a confirmation. All right, and I really never look at the indicators because when you're focused on pure price action, you know exactly what it is you're looking for. You know what I mean? I'm putting these on here as a tool for you guys. It's kind of like, how do I want to put this? It's, let's say I dumped off of a bunch of construction equipment at your house and gave you some blueprints and said, here you go, build this house, I'll be back in a year. Most of you, I'll come back in a year and you're still going to have the stuff all over the place, even with all brand new shiny tools, because you really have no experience in even how to build a house. So, before the tools come in, you really need to have the knowledge of what's going on up here, because the tools are just a complement to what you already know. You know what I mean? They'll give you that extra piece of confirmation, if you want to say that. But just like I said up here, I'm looking for specific entries, to take quick in and out trades in these market conditions, and you guys will get that. Remember, like even if you did jump in, on this bar to go short, the overall direction. Remember, think of this as, I don't know, a conveyor belt. All right, think of the 20 period moving average as a conveyor belt, like at Walmart. It's just bringing your groceries down, right? You throw your groceries on there, doesn't matter where you go, they're still going to go in the direction of the conveyor belt, right? Does that make sense? So even though you might not get it in on the perfect spot, they're still going to go in the direction of the conveyor belt, right? So let's say you went to go short here on this green candle, okay? Sometimes you're not going to get the perfect entry, right? You always want to go short close to that conveyor belt, right? At or near. But even if you went here and it went against you, the overall momentum of the conveyor, the overall direction of the conveyor belt is still going to bring it in your favor. So even though you're wrong, you're still going to be right when you're following the direction of the 20. We wouldn't be trading in here, and I'm glad this looks like this right now, but because the 20 has no direction, right? It's just going sideways. So why would you trade when the 20 is moving sideways? Your best trades are going to be when the 20 has a clear direction, right? So always trade in the direction of the 20, but you're also going to need this knowledge of what it is you're looking for, right? Like this was a monster negative bar, right? Negative bars shoot negative energy, positive bars shoot positive energy. But when you have a monster negative like this in the room, he's taking everybody down with him. Doesn't matter how big the positive guy is, because negativity will always destroy a little positiveness. Does that make sense?
Yep.
Or if,
Yep.
and don't worry, guys. You're not going to learn this. This is why we're taking 30 days, and I don't care if we take 60 days, because I want you guys to be comfortable and up to speed and know exactly what it is that I'm talking about, and I want you guys to be able to tell me what we're going to do and when we're going to trade before we even touch real money. All right? And there's no rush in this, because once you get it, the money's going to come. All right? And it's going to be something that nobody can ever take away from you. You know what I'm saying? So don't worry about losing money, because you're not going to lose any right now. And I don't want any of you trading until you know what you're doing.
Yeah.
But by next Friday, if you're here with me every day, you will have an understanding of this concept that I'm talking about right now, and then we can move a little further and learn other things, all right? But since we're in these market conditions, I just want you guys focusing on ranges. I want you guys focusing on the 50% launching pad, and I want you guys focusing on the no trade zone inside those ranges, all right? So that's what I really want you guys to pay attention to. So even when we end this live stream, which is going to be soon because I got to work on the boot camp, but go back, and mark off your ranges. You know, even right here, I mean, this is, from right here is one big range. All right, see if you guys can identify ranges. This is the total range. All right, and we're going to go use this right here. And then this in this area is your no trade zone. This is going to keep you out of losing trades, right? Whenever you get outside of that trade zone, you're looking to go right back into it. All right, so the trade zone, you're not trading in this area. You're not trading in this area. All right, don't take any trades in that zone because the algorithms will hit your stop loss every time. I would say 95% of the people lose their money in the no trade zone. All right, the people who know what they're looking for and know how to do this are only trading outside the zone to come back in, because this zone right here, think of it like a magnet. Okay, whenever you have a range like this, your no trade zone is a magnet, just like the 20 and the 200. All right, so whenever the price comes away from that magnet, it's going to want to come right back to it. Okay, so think of the middle no trade zone as a magnet. Whenever the price comes away, the magnet is so strong it just pulls it right back to it. So these are the trades you're looking for. Okay, and now,
So, to identify the no trade zone, how would we do that?
what you want to do, and this is pretty much, let me get the big box first. Okay, you're gonna as the trade unfolds, and it doesn't matter. Let me use a new one, so it doesn't even matter which one we use, right? So we'll start as the price. This is really hard because the whole entire thing is a trade zone. I mean, we have these big zones like this, right? Then we have the small ones. So I guess it doesn't matter which one we use. We'll just pick any one. So right
What
here,
time frame?
this is a 2-minute time frame.
Okay.
So let's just use this one. When price came up here and came down here, you're just going to mark off that zone. Oh, great. Now the live stream just went again. Ay, caramba. And then a bottom or a bottom. Just mark it off, okay? And by the time whenever you come in, you're going to automatically see a zone. But you're going to want to mark off like your middle and then the outside. And the outside, and I know this doesn't make much sense to you right now, but the outside again is going to be like that topping tail. It's going to be able to pull out and up almost identical, so that this looks like a topping tail candle. I mean, yeah, a candle. Okay, so that's how you're looking to set it up. So from here, okay, that's how you can identify it. So from here,
So you're saying actually draw a range, so it would.
yeah, you want to draw your high and low, but
So if it bounces off the low, which would be your support in that range.
well, your lows would be here, and your high would be up. All right, OBS is really acting up. You can't make this stuff up. I don't know. Well, it's still streaming, so that's good. All right, so right here, this is how you would do a range, okay? Price moved. We got a high. If you're trying to do it in, real time, we got a high and a low. All right, so right now, to me, that would be the bottom and the top of the range. This right here would be our no trade zone. You don't want to take any trades in there, and that's how you would start off a range. Take your high and your low, mark off like a little equal amount, and put your no trade zone in between it. Does that make sense? That's what I was trying to show you over there. So this is perfect.
So basically, that's chop, right? That's
Right.
called chop.
That's what a range is, sideways movement. Right? It's just choppiness. But you can make money in choppiness if you know what you're looking for. If you can identify the range, you can always sell the top and the bottom, buy the bottoms, because the no trade zone is a magnet. it's always going to pull price back to it. You see how it's doing it right now? It's always going to pull price back to that range. So that's how you would identify and start a range. All right. So now we can look at this as a fresh range, and this will probably hold true until 2 o'clock. You're probably just going to see this chop until 2 o'clock. But at the same time, let's see if we can confirm this a little better. All right, now this is the right side of the roof, and we have a candle starting to break that. But again, we have this range, right? It's probably going to want to range bound in that range until 2 o'clock. That's just the way the market likes to move when we have FOMC minutes. So let's look at this again later. So let's mark off this. So 1910 or 10-9-10. And I just want to do this so we can look at it later on today or tomorrow. Let me take a screenshot of that so we have it. All right, FOMC range. Now tomorrow we'll confirm if this actually played out. And let me draw the no trade zone. And take another screenshot. Just so we have it tomorrow and we can go back, or not even tomorrow. I'll post it later on today and we'll compare. There we go, so we got it saved. But again, we're just kind of in that area, right? So now that it's coming out, if we get a nice bounce down here, and notice your RSI again is already in that uptrend, right? Your RSI is still in that uptrend. So you can even draw that off as, you know, a new trader. We got divergence already, right? But this should be the range. I mean, this is going to be your magnet. This area right here is going to be your magnet. So as price comes out of that range, it's going to want to go right back to it. As it comes out of that range, it's going to come right back to it. And notice that candle with the smoke didn't quite make it yet. But again, looking left, let me move all that. We already have it saved, excuse me. Right, we still have this bottom down here, so the bears, this is the room the bears want to come back to, right? The bears want to try their hardest to bring this back down to this area. 10,770, okay? So just remember that. But the fact that, you know, we're not breaking that area, like I said, it's, you know, it's kind of telltaling. But again, the FOMC minutes are going to be the determining factor. If that comes out bad, we're breaking through that like an 18-wheeler breaking through a barrier. Remember, like I said yesterday, the bulls like to use the stairs, right? But the bears like to use the elevator. So the upward movements don't happen like the downward movements. The downward movements, it's like they just jump out of an airplane and price moves. But for the bulls, they like to stair step their way up to profits. Does that make sense?
Yeah.
Cool deal. So yeah, we have this here. We got our uptrend. We got divergence. We're outside of the range. Now we're coming back into it. But if you guys want to practice, keep it on one contract. Cause I'm going to jump off here. It's 9:30. All right. And if you want to set up, if you just were to go like this, let me get it on here. If you were just to left click your screen, you could put a buy limit. And if you hold it on the right, you can move it and drop it wherever you want. So you could just kind of move it, have it ready. And if it comes back down to fill it, you know, you could just practice. Practice with that range that I showed you today. You know, sell it outside, buy it underneath, and see just to get a feel for how the buying and selling actually works. If you come up here into your brackets, you click on the icon, turn this to value, which is the dollar amount, and put in your take profit. I got $11.50. Your stop loss, which is $17. Make sure you turn this on, and then click save. And when you get into a trade, you see here's your stop loss, here's your take profit, and you can even adjust that. You can move it up high. Don't ever touch your stop loss. I don't want you guys to ever touch your stop loss. All right. So just get in the habit of taking a few trades, get a feel for the platform, how you get in and out of a trade, and take a few trades. Let's see if we get filled here. I mean, this take profit would have been perfect here because it's right at the 20. But let's just see if it fills it. Didn't know we were at the opening bell.
Yeah.
Well, let's just see if we get filled for the heck of it.
Order filled.
And if it takes our stop out. But yeah, I wouldn't recommend trading the first 1 minute bar of the opening bell. There, so we got filled. We made $11.50 on that. So yeah, also do me a favor, all right? Just practice trading, but over here in the chart settings, go to your fills and orders and click show fills. This way tomorrow you can screenshot it and send it to me or upload it onto the group chat. And don't worry, first of all, there's not many people in our group right now, all right? So don't even worry about that, but we're here to build one another up. But then you could say, this is where I got in, and I could see it, and I could tell you, that was right, or, what you did wrong, stuff like that. You know what I'm saying? And that's what I want you guys to do as we go further. And when you're learning, I want you to be able to speak to why you took that trade, right? Because you never want to take a trade just to be in a trade. That's the worst thing you could do, and that's why so many people fail. Now look at what we're doing here. We're right down to our support on the RSI. We came right down to this wedge. And remember, I said they'd like to do 3 times before they'll bounce back up. But we have that big gap below us down to what, 10,700? I just said, right? Let's look. 10,770. So the bears want to bring this right back down here. But if this bar closes, here's our 8:30 time frame. Right, this is a pretty clear cut and dry, so this might be a really good area to trade. There we go, it closed. I'm just going to sell market.
Order filled.
And my stop is 1 bar, which isn't good, but I'm not going to move it. But I'm confident in that massive bar. And they're probably going to pull
Stop
it up
filled.
through stop, so we lost $11.50. But that's kind of the name of the game, and that's why now you see it came right back down, because it hunts stops, right? So this is what I talk about when I tell you guys, like on a big bar like this, to enter on this bar, you would literally, let me just show you real quick. To enter on this bar, you would have to put your stop loss all the way up here. Now, could you imagine putting your stop loss all the way up there? You see what I'm saying? Your risk to reward is just ridiculous. So to enter on that bar, you just saw why you would not want to do that, right? I'm actually going to move my take profit down a little bit more. Okay? So you would want to wait for your second bar to form before you would enter a position, because then you'll have a reasonable stop loss. You could put it, 1 bar away from the bar that you entered on. But that's why I always say when I'm going to take a trade and I do those things, like if I was paying attention, I would have bought right in here to sell. But again, this is negative energy, a big red opening bar. So we close, clearly that bar closed below our 1 hour time frame, which would be actually all the way up here. But with the same breath, there's not many people that are really going to be trading because they're going to all wait for that FOMC minutes, right? But again, negative energy likes to shoot its energy to everything around it. You know what I'm saying? So that negative energy is always affecting the next few bars. All right, now that this bar has such a big topping tail, If we come back down here, I'm not going to move my take profit, but I'm going to exit the market and cancel my position if we get a little pullback. But this bar has a really big tail on it now, right? Are we going to come all the way back up here? I highly doubt it. You know, we're probably just going to see the same kind of number that we did right in this area before it sells off. But again, it's just going to be chop. And now that would change the whole parameter of your range, right? So now really this is your range. And now your no trade zone is going to be at the bottom of where you were before. If that makes sense to you. You know what I mean? So you want to keep expanding that, but 9 times out of 10, when you come into the market, it's already going to be printed. Things are going to be looking good. You're going to be able to identify that as soon as you get onto your charts. And then you're just going from the future, you know, what you have before. Now notice, look at how big this is why you don't want to do that, right? This is why you don't want to enter a bar like that, because look at my loss now. That's a huge loss to put your stop on a big bar like that. And that's exactly what I mean when I say
stop filled.
When I say that's a huge risk to reward, right? So if you were going to enter a trade like that, you want to enter it where there's small bars, so your stop loss is very small. Does that make sense to you?
Yep.
And that was a perfect example of why you don't want to enter when you have a massive bar that your stop is going to be 1 bar, right? So you never want to enter where you're going to have a massive loss like that. So that was about a $100 loss. And that's what I mean when I say you risk to reward. So you don't want to enter a trade.
This is the MNQ, Bang Bang?
Yeah, this
Can
is
you
the
watch
MN.
on Thinkorswim, and if so, do you know the ticker symbol?
You would put /MNQ.
Okay, so when you're looking at this and you're trading, you don't trade on the 15-minute, 5-minute, you really trade on the 2-minute?
I only trade on the 2-minute. I use the rest of them for references. But even like this here, you know, we should have been looking to go long because we had the divergence, right? So we should have been looking to go long. But again, if we weren't in the trades like that, I wouldn't even be trading right now because, like I said, we're probably just going to range bound in this area, right? And again, the overall big picture is down. But like I've been telling you, if we were going to break lower, it would have already happened, in my opinion. You know what I'm saying? And the only reason I did this so you guys could see the stop loss of a big bar, why you don't want to do that. You know, because if you're going to take an entry, you want your stop loss 1 bar, right? So you don't want to take a big bar like that to have a huge stop loss. Because even though you only get $2 per dollar move, the NQ moves massive amounts every day. You know what I'm saying?
Are we looking at the MNQ or the NQ?
The MNQ, but they're both identical.
Oh, okay.
One is just
and then, okay.
the only difference is this. Let me show you. If you go to the MNQ, and let me get this to 1, and we're going to sell.
Order filled.
Look at the amount of money you make on the MNQ or the NQ, because for every dollar it moves, you're going to make $20, or you're going to lose $20. So the dollar amount is tenfold of what you would make or lose on the MNQ, which is why I wouldn't want to trade this with you guys. So the NQ, you're only losing $2 per dollar. On the NQ, you're making or losing $20 per dollar move. So that's the huge difference.
Do you know the ticker symbol, how to watch it on Thinkorswim, the NQ? Is it /NQ?
Correct, yep.
Order filled.
/NQ. So we made back the 8150 we lost on the NQ, the MNQ. But to trade the NQ, you need $500 for one contract. To trade the MNQ, you only need $100 to trade one contract. And all we're going to trade is one contract. But like you just saw, this is why I want you guys to understand what we're doing. I don't ever want to see you guys buying on a bar like that. And also your stop loss, I moved that stop loss. If I didn't move it, we would have only lost $17. But I wouldn't have lost that $17 because I wouldn't have taken that trade at all. But I just wanted to trade with you guys so you could see, and especially that bar. But again, keep your eyes on the range. Notice where it stopped, that price stopped, right? Right at the top of the range. And again, you have your no trade zone. And it would actually come right down to that now. So this is you don't want to trade in this area. You just want to trade outside of it.
Right.
Okay? So even here, like when we went short right there, we already had divergence. We just said that before we got in that position. But again, we had this big range bar that opened outside of that range, right? But what did I tell you? I said we should probably get out of it because of that topping tail. Right? That was a lot of buyers coming right in for that. But again, today's just not really the day to trade ahead of the FOMC minutes, because you're going to see a lot of these games being played. You know, and a lot of times right at the open, especially last week, I mean, remember you'd have one bar down, one bar up, one down, one up. It was just complete chaos for like the whole first hour and a half. I don't know if you guys remember that last week, but sometimes it'll just do that. It'll just go up and down and up and down and up and down and up and down. So yeah, I mean, again, we have the pictures for it, but already even without the pictures, it's respecting the range beautifully. And this, I wouldn't even make it that big, because that's not equal. This would be your no trade zone, right in this zone. So you see how we validated that with this pullback here. So now you have a decent sized range where you don't want to be trading in, right? Because in this area, right, even though it pulls down to the no trade zone, nothing closed outside of it, right? So you could have went to go long there, and then the next bar closed outside of it, and it would took you out, right? So it's best to stay out of it until you see bars actually closing outside of the range. If that makes sense. Does that make sense? Maybe, maybe not. So that's the game plan, guys. Just wait for, I would really like to see you guys take a few trades today just to get familiar with it. Again, make sure you're on your simulation account and not your real account. And the one last thing that I want to say is make sure when you're done trading, hit this exit, market, and cancel a few times every day when you're done trading, just to exit out any positions that you may not be in, because it's happened to me before. And let me show you what I mean. If I hit sell market here, right, and then I went like this and I put a buy market, I might, typically what I was doing, I would have it like this, but I had it down here in this green area, and notice you can't see it, and that happened to me. So if you're gonna, just make sure you hit exit like that so there's nothing there, because that's one of the worst things that could possibly happen to you, and you don't want that to happen to you. You don't want to have that order there, because if the price comes down and fills it and you think you're closed because that closed out your order, and then you shut down your system, you know, let's say it came down to your buy order, and you had a buy order here, and then price came down, filled it, and then just continued to tank all day, and tomorrow you came in and they would close your position out if you ran out of money, but don't let that happen. Just get in the habit of clicking exit at market and cancel. All right, you just want to be 100%. You don't have any orders, and I think in this area there's an open orders position you could actually put on here. Let me look at that today, because it'd be nice to have that up here so you could see if you actually have any open orders in your cache. We actually might be able to. You know what, let me look at this while we're here real quick. No, I'm going to call them and see if we can see if there's any way to get that on here so that we could actually see if there's a pending order or transaction. But until I get that, just make sure you hit exit a few times, exit and market, and then we'll see that. So here we are breaking out of that range to the upside. Now remember, this is where your resistance would be. Fives will take trades, and I actually want to take real trades, not just do what we did here. But go ahead and, you know, take a trade or two, get comfortable with the system, and then when we actually take trades together, you know, trade, we'll talk about it before we get in, and I'll tell you why we're getting in or why we're not getting in. So just take 1 or 2 trades today. You know, it doesn't matter if you're right or wrong. Just get comfortable with it. You know, take a trade by chart and click like this. So if I click down here and I put sell, see my sell stop is here. So now I could have it ready. If I wanted to sell, I could just drag it and drop it, right? If I wanted to sell here, I could drag it and let it go. And then as soon as price comes to there, I don't think it's going to, we're probably going to lose that money. Maybe not. But you could do the same thing up here. You could put a buy limit and you could drag and drop it. Okay? So you can have an order ready. So get comfortable doing something like that. And then also, let me explain the sell market and join ask. When you, let's just say all right, let's do it. I sell market, it automatically fills me. And let me open this up so you can see it better. All right? So I sold market and it automatically filled me. Now, the difference between sell market and join ask, let's hit join ask. It took a minute to get filled because you're asking to join at the price it was at the second you joined it. So what happens is when you hit sell market, you're typically going to lose money as soon as you hit that button. Like, you know, you're going to lose maybe $2 or $4 the second you hit that button, because it's putting your order ahead of everybody else's order, and you're going to pay for that option. All right, but you're never really going to notice it, but you will notice it when you're trading in the pre-market hours, as far as like 3 a.m. trading goes. You know, you hit the buy or sell button, you're going to notice it right away because you're going to see you're automatically down $4 or $6. But if you're trading in the right direction, it doesn't matter. And then when you hit the join ask and it fills you, you know, you're getting the price that you want to get. If that makes sense to you what I'm saying. So you're not getting filled immediately, but you're going to get filled at the price you want to get filled at. See, so this one we didn't get filled on because we're waiting to join the ask, right? So it won't, oh, did we get filled on that? See, I'm looking at other things while I'm talking to you, but if you hit the join ask, notice it did fill. Price is moving too fast. Remind me tomorrow at 8:30 because it'll be easier for you to see it. But the join ask and the sell is immediate. You're immediately getting in, you're immediately getting out. The join ask is if the price moves away from you quickly, you're not going to get filled until it comes back to you, to wherever you hit that button. But during this time, the price fluctuates so fast because of the time frame we're in. It's pretty much like joining, you know, it's not going to matter either one that you do. So, but I can't really show you how it truly works right now. because the price action is moving so fast. But that's the difference between sell market and join ask. Sell market or buy market means an instantaneous fill. Join ask and join bid means the second you hit that button, wherever that price was at, it's going to wait until it comes back to that. If that makes sense. And you'll clearly see what I'm talking about tomorrow at 8:30 when price isn't doing that. So in turn, what it's saying is, let's say you hit the button, let's say you hit it right here, and the price already moved away from it. It's not going to fill you until it comes back to it, as opposed to if you hit buy market, it's going to fill you instantly, and you're going to go with the flow of the price. All right, so I hope that makes sense. Don't worry about it if it doesn't. Tomorrow we will discuss that, but again, I'll talk forever, so I want to get going because the boot camp is going to take a really long time to put into play. But again, I'm not trading anymore today, so we're up, I don't know, $70, $80 on the day. And again, these weren't real trades. But anyhow, glad you guys showed up. I will see you tomorrow, and I'll probably start posting around 2 o'clock. Maybe I'll trade after that news if we get a clear-cut direction. But again, just be careful. And I know you guys aren't trading, so, just pay attention to the markets. If you have time, sit here and watch how price action moves. All right? Don't just go away because I'm going away. All right? Trading, it takes patience. It takes time. It takes knowledge, understanding. And your learning doesn't begin until you enter a trade, especially with real money. Trading on the practice account, I want you to treat it like real money. But the learning process, doesn't matter how much knowledge you have, the real learning doesn't start until the second you're in a trade, because that's when your emotions kick in. So just remember that. I could give you this whole 30-day boot camp, which you're going to get, and you'll have the best knowledge you're ever going to get, but it's not going to make a difference until you're live and in a trade and you're able to see what those emotions look like inside of that trade. All right, so the real knowledge and understanding and the process begins when you're on the field, right? Just like playing a sport. The coach can talk to you all day long in the break room. It's not going to mean anything till somebody's plowing you on that field, right? Then you're going to be like, whoa, this isn't what I signed up for. All right, guys, so have